Cryptocurrencies, specifically Bitcoin, have taken the world by storm. Public interest in cryptocurrency has soared. It's a hot issue among investors and in popular culture, courtesy to everyone from longtime investors like Elon Musk to your local grocery cashier. But is it as necessary and groundbreaking as everyone makes it out to be? Is Bitcoin really the future? Today, we'll be diving deep into the world of cryptocurrencies, exploring how it holds the interest of the whole wide world, and trying to answer the question, is Bitcoin the future? If you're looking for more information about what's going on in the world and economics, be sure to hit that subscribe button and ring that notification bell to be notified of further videos. Despite the fact that the concept was established a few years ago, a typical question that most of us have is, what is cryptocurrency? Electronic money, or cryptocurrency, is a type of digital asset that serves as a means of exchange in a wide range of cryptographic transactions. This means of exchange also aids in the management of the generation of new currency units. Despite the numerous discussions and press releases regarding cryptocurrencies, few people and companies are familiar with the notion. It is critical that more people become aware of cryptocurrency's effects and applications. Bitcoin, digital money, was the first cryptocurrency to be released in 2009. Since then, a slew of other cryptocurrencies have emerged and are making their way across the market. Bitcoin is part of a decentralized and distributed digital cash system that is measured using the blockchain transaction database, a digital ledger. Bitcoin's branding is great, and it's done in a very precise way. It's the new gold, according to popular belief. Traditional gold diggers, equipped with pickaxes and hard hats, toiling in the sun, perspiration dripping from their brows, come to mind when the phrase miners is used. There is no actual mining in reality. Bitcoin is developed by supercomputers that use more energy than several small nations to complete sophisticated algorithms. Furthermore, Bitcoin is not the same as gold. It's a non-physical phenomenon. It exists on the blockchain, but it does not exist in reality. Furthermore, Bitcoin, like the blockchain, may be hacked. Bitcoin is, at best, an insufficient kind of money, even without hackers. If you're still not convinced, consider El Salvador, which just declared Bitcoin legal money. The launch has been a complete flop, owing to the fact that the typical individual does not desire Bitcoin. They want a currency that is steady and does not vary in value from day to day. Bitcoin, on the other hand, is nothing more than a toy for the super rich in the United States, and a risky bet for the poor and middle class, many of whom have little in the way of savings. The US currency has its detractors, and rightly so. The greenback's attraction has faded, especially as the current US president continues to print it into oblivion. Two wrongs, on the other hand, do not equal a right. Bitcoin is not a solution to the dollar problem in its current form. Individual skepticism will persist until millions of people in more stable situations, like as the United States, can use it to buy everyday necessities. In 2021, mainstream corporations from a variety of industries expressed interest in cryptocurrencies and blockchain, and some even invested in them. AMC, for example, just stated that before the end of the year, it would be able to take Bitcoin payments. PayPal and Square, for example, are banking on cryptocurrency by enabling consumers to buy it on their platforms. Tesla continues to waver on whether or not it would accept Bitcoin payments, despite the fact that the firm owns billions in cryptocurrency. According to experts, this form of buy-in will become more widespread in the future. While the majority of people do not perceive the benefit of paying for things with cryptocurrencies at this time, the addition of more businesses accepting cryptocurrency payments may change the landscape in the future. It will likely be a long time before spending Bitcoin on products or services is a wise financial move, but more institutional acceptance might open up new use cases for common people, affecting crypto pricing. Nothing is certain. But if you are investing in cryptocurrencies as a long-term wealth store, the more real-world uses they have, the greater the demand for and value of the cryptocurrency. Because Bitcoin is the largest cryptocurrency by market capitalization, and the rest of the market tends to follow its patterns, it is a good predictor of the crypto market in general. Bitcoin's price underwent a wild journey in 2021, reaching a new all-time high in November when it surpassed $68,000. This new high follows earlier highs of over $60,000 in April and October, as well as a summer slump to under $30,000 in July. One Bitcoin is currently worth around $46,000 as of April 2022. Because of this volatility, experts recommend limiting your crypto investments to less than 5% of your whole portfolio at first. The volatility of Bitcoin is just another incentive for investors to stick to a long-term strategy. If you're purchasing for long-term gain, don't be concerned with short-term fluctuations. The greatest thing you can do is set it and forget it when it comes to your Bitcoin investment. Emotional reactions can force investors to behave rashly and make judgments that result in losses on their investment, as experts continue to warn us every time there is a market movement, whether up or down. We may guess what the value Bitcoin will have for investors in the future months and years, but the truth is that cryptocurrency is still a new and speculative investment with a little history on which to make forecasts. No one truly knows what a particular expert believes or says. Therefore, for long-term wealth growth, you should only invest what you are ready to lose and stick to more traditional assets such as real estate and stock market investments. Keep your cryptocurrency investments to a bare minimum and avoid prioritizing them above other financial objectives such as retirement savings and debt reduction. If you enjoyed the video and learned something from it, please consider liking and subscribing. It would mean a lot to keep these informative videos coming your way. And if you want to be notified when a new video drops, be sure to ring that bell.